Okay, hi everyone. Welcome and thank you for joining us today. I can still see there's people still jumping in. I'm sure that's a Monday slash December slow start to the day. So just to get going, I'd like to start by acknowledging the traditional custodians of our country throughout Australia and their connections to land, sea, and community. We pay our respect to their elders, past and present, and extend that respect to all Aboriginal and Torres Strait Islander peoples today. So I'm coming to you from Gadigal land. I believe our guests may be as well. So my name is Kylie Little, and I am the climate tech lead here at KPMG High Growth Ventures. I think I've met lots of you over the past 6 months as we've been sort of getting focused into this space. For anyone that is new and is not familiar with High Growth Ventures, we're a team within KPMG that works with founders to build sustainable, scalable startups. We've developed a range of services specifically designed and priced for founders from seed stage and beyond. As I said, for the last 6 months, I've had the very lucky job of being able to jump in and turn all of my focus into the climate sector as we've seen growth in this space to really try and get a better understanding of what we can be doing to better support founders that are really operating in a sector that's growing, but also has a number of challenges. I've spoken to lots of you during this period, and it's been really helpful to me, and I've really appreciated your help as I gather more insight and understanding and try and figure out what else we could be doing that could be beneficial. So during a lot of those conversations, and I think a lot of the sessions we've done with the Climate Salad team, one of the things that's really become apparent has been the number of founders that talk about looking for investment from family office as opposed to targeting traditional VCs. It's hardly surprising. There are an estimated 2,000 family or private offices operating in Australia. The 350 largest family offices are estimated to manage between $515 billion and $695 billion worth of wealth outside their operating business. So it's kind of a staggering amount of money. We're increasingly seeing activity in this space focus on generating positive impact by investing in climate and sustainability focused solutions. Obviously, there's an opportunity here. I think the biggest challenge we all see is just understanding what this looks like. What are these family funds doing? How are they operating? One of the big things we've seen is that there's a tendency for them to not necessarily want to be visible. They're out there, they're investing, they're looking at opportunities, but we can't all necessarily see exactly what's going on. And I know for a lot of founders I've spoken to, you see the opportunity and really want to find out, how do I look at exploring this further? Even for this call, it was quite interesting how tough it was to actually find family offices who are actually comfortable sort of getting out and having a conversation about what they're doing. So I cannot say how appreciative I am to the guests that we have today who are actually going to give us some insight here and help give us some more awareness of how this works. So today we are very, very fortunate to be joined by the heads of 2 family offices that are going to help us dig a little bit deeper and understand this further. So a big welcome and a huge thank you for joining us today. So Vic Denholm, CEO of Wollemi Capital Group, and Sally Hill, General Manager of Tripple. So hello, Sally and Vic.
Hello, thanks for having me.
No,
thanks for the invite.
Yeah, and it's a mad time of year, so we really appreciate you doing this. So I think to get started, I think it'd be really great if we got just a bit of a background from each of you on your family office funds and also your path to those, to being in those family office funds, because you've both got very different paths. So Vic, maybe if I kick off with you, I guess that background on your family office, how long it's been operating, why it got started, why you got involved, that would, I think, be really interesting.
Yeah, awesome. Thanks, Kylie. Hello, everybody. We are I keep saying we're very new to this family office journey. It's been 2.5 years now, so I probably can't say that anymore, but when you meet family offices that have been around for multiple generations, definitely feels very nascent. We have, like I said, been around for 2.5 years and are very impact focused across 3 key pillars for us. The first is climate, which is obviously why we're all here. The second that's really important for us is diversity and gender equity. And then the third pillar for us is community. There's a lot of tie-ins between our investments that cross multiple pillars, but science and technology is a really big underpinning for us. We are super excited to be, involved in this cohort and are starting to do more direct deals, both in the climate space and in other spaces. But for us, it's definitely been a bit of a journey. My own background prior to jumping into the family office full time, I was actually with the amazing High Growth Ventures team at KPMG. So can give them a big rap. But our family office is still very family dominated. It's myself and my brother that are running the day-to-day. We don't have any external hires on the investment side, but we do work with an external advisor. We have an investment committee that's myself, my brother, my mom, and our external advisor. And so we probably run a little bit more like a family focused family office, as opposed to some other offices that are more kind of venture style or external run.
And Vic, just quickly, so like what was the motive, like whose idea was it to start the fund? Like where did it come from? Like why did you start?
Yeah, great question. I mean, we had an incredible opportunity to start a family office. I'm sure many of the people on this call know my mom or know about my mom. She was in the fortunate position to be able to seed the family office. She is very impact focused, and kind of the three pillars that I mentioned are very core to her and core to our family identity. And so the ability for us to be able to kind of adventure into this world and make an impact and kind of grow that initial seed capital was really where the genesis of it.
Yeah, fantastic. And so Sally, you're in a slightly different position because you've actually come into and been engaged by the family to run the family office. So it'd be great to get, like, I guess one from you, coming from outside and stepping into a family office, how does it differ from a VC or other fund? Like what does a family office, what is it to you?
Yeah, so a bit of background on Tripple, which is the company that I work for. So we actually rarely refer to ourselves as a family office, but in essence, that is what we are. So the company was set up by three siblings, so Beck, Jake, and Adam Milgram, and it was started about 5 years ago. And the background to their starting the company was really around an inheritance that they had that was that initial seed funding, similar to what Vic mentioned, where they jointly decided that they wanted to essentially create a bit of a demonstration project, or something that would demonstrate to other investors, maybe to other members of their family, that it was possible to invest in 100% impact across social and environmental impact for them, as well as they look at diversity really deeply too. Essentially to be sort of something that other investors could look to, where they could mirror their portfolio around triples, and not have anything really out of the ordinary in terms of risk or return. So it looks like any other fund, but for them, it was really important to make sure that was 100% impact across the whole portfolio. So yeah, it started about 5 years ago. I joined just at the start of this year, and my background prior to that was not in finance at all, not in investing. I haven't had much exposure to the VC world previously. My background was more as an entrepreneur myself. So in terms of demystifying this space, I feel like I can potentially help others sort of translate from, what it's like going from the outside to the inside, looking at, what these motivations are that I've discovered being part of the team. And really, for me, what brought me in was a philosophical alignment and essentially a joint values that I share with the family. And that might be, it's often something we're looking for in the founders that we invest in and the companies that we invest in. It's sort of a shared view of the world or the future, and really a sort of deep values alignment. So yeah, my background was more in kind of advocacy. I run a conference called Purpose that some of you might know, which is sort of about community building and supporting the purpose-driven business movement as a whole. And Tripple were very much aligned with this philosophy of wanting to invest capital into doing the most good it possibly can, and in the process try to make a dent in kind of transforming capitalism to be more based around responsible, impact-driven businesses.
Yeah, great. And I guess the difference, like with Vic, it's like it's the family that's doing this, really without much sort of external input. Whereas you've got a couple of other sort of team members that are not family. Is that correct? And then the family sort of oversee. Like how does that work for you? Like how effective is that for you in terms of, does that mean you've got 3 bosses? Does it mean how does that work for you in terms of how you guys operate?
Yeah, I do. I do have 3 bosses, which I really love, actually. Like we're a very agile team, and we're a very close team. We're fortunate to just be a small team of 7, and 3 of those 7 are the founding directors, who kind of I guess they would be very active board members, so they're across many of the decisions we make, all of the investment decisions we make, but they've hired me to really run the company day to day. And I manage a small, the team of, so our investment lead, our philanthropy lead, and a team coordinator. But I mean, in terms of, how the investments go, we are like a family office, and it's just a completely private investment committee. There's no, external LPs or anything like that we need to think about in terms of making investment decisions or shaping our portfolio, which is a fortunate position to be in, really, because it gives us a lot of freedom. But we do, like I said, we kind of want to mirror any other portfolio in that we don't, we are making decisions based on impact, and based on this, very small group of people, but those are all in exceptional companies that are, their same return expectations by and large, and we're looking for a lot of the same things as a traditional, VC company. We just happen to be able to make decisions a lot quicker because we're very much aligned.
Yeah. Okay. And I guess for each of you, that's thinking about like an investment mandate, or whether you're investing in a stage or a sector, or do you have a specific thesis around how you operate? Because I think generally if we look at VC, you can kind of figure out pretty quickly when you start doing your research what VCs are operating where, and what are they focused on, and what stage do they want to work in, and generally they have that sort of mandate. Be great to know from each of you. So maybe start with you, Vic. Like what does that look like for you, and like what is the sort of structure around how you think about what your investments should look like?
Yeah, it's an interesting question. And in some ways, it would probably be easier if we had a very clear mandate, but we, from a size and check size perspective, are a little bit agnostic. We've done everything from a very early pre-seed, pre-product deal all the way through to kind of later stage, looked at everything through to a Series D. We haven't pulled the trigger on anything that late yet, but not that we wouldn't. I think for us, it's really about, alignment from both a, core pillars and values perspective. But, we are also looking at investing in good businesses that we think will have good returns. And so for us, it's really about, balancing that impact with that kind of financial return, and having high enough conviction and the ability to kind of support beyond just capital. I think we are really drawn to companies that we understand the problem space that they're in, or that we, think that we can add value from a very kind of low touch perspective. We haven't led any rounds to date, not to say that we wouldn't, but, being such a small team, we just don't have the capacity to really kind of take board seats and really do a lot of that hand holding. So anywhere that we can kind of low touch point add real value is kind of also on our radar. And then I guess the other thing to kind of flag, and I mentioned this in our prep call, is one of the things that we're starting to do more of is co-invest alongside funds that we are LPs of, which for us is really kind of useful to kind of pick the winners from those funds, but also to just, give us exposure to companies that we've seen kind of come through those funds and in their kind of second, third raises with those funds. Sorry, my lights just turned off. Be able to kind of have higher conviction and trust that the fund will do a lot of the heavy lifting in terms of sitting on the board and taking them through those kind of scale up journeys that we just, like I said, don't have the capacity to really commit to at the moment.
Yeah, okay, that's great. And Sally, what about for you guys? Oh, mute.
Thanks. Yeah, we don't have a really, we're not really laser focused on any particular stage, and we don't necessarily have a really strict mandate, except that we essentially think very deeply about wanting to make the most impact we can on environmental and social impact. We have an impact measurement framework and calculator that we use internally to kind of discuss deals based around impact specifically. So to tease out those areas where, essentially the deals that feel most aligned with us. I'd say we're a pretty flexible capital source in that we can do both debt and equity, which is something that's a bit different about family offices to, say, a VC fund. And we have, I guess, slightly different timelines, but we are looking for a lot of the same things. So we might be able to offer, say, a slightly more patient form of capital that takes a company on a slightly longer journey without that kind of really accelerated sprint to an exit. And just to give you an example of some of the companies we have invested in terms of our direct investments. So we have invested in companies like Amber, who are an energy company that many of you might know, Future Super, who are a fossil fuel-free super fund, Steward, who are a kind of incubator of regenerative agriculture startups, Bright, who do financing for solar panels on homes, and Fable, who are a mushroom-based alternative protein company. And so there's quite a variety there, but those examples I mentioned, we have funded with a mix of debt and equity over time and in various scenarios. So we do try to be able to provide some appropriate capital to companies wherever they are on the journey. The more important thing for us is that alignment and that shared kind of vision of the future and shared values with the founders. So we know really we're investing in something that in the long term is going to be shaping that future that we're keen to support. And I think we mentioned this as well on the prep call, this idea of, some companies have an incredible solution to the problem in the short term, but they might have some significant downsides in the long term, or have some, unintended negative consequences that are involved in the scale of, say, a product or a piece of technology. So we really scrutinize and investigate heavily around that impact side to make sure as this company grows, the impact and revenue are locked together in growth. So there's no downside in terms of impact as the company scales.
And a quick call out from Tim Prosser there has just flagged that you got Impact Asset Owner of the Year.
Oh, we did, yeah.
Investment award. Congratulations.
Thank you. Thanks.
Yeah, so and interestingly, as Vic was saying, so how much would you co-invest with sort of other VC, other family office? Like how fluid is that sort of activity between you all? Yeah, Sally, yeah.
In terms of discussing our deals with other family offices?
Yeah, I guess working, I guess where Vic's saying, if they're investing in a fund and that's really serves a purpose for them as well, and sort of saying there's an interesting opportunity, but we can see that investment, so it's an interesting way to actually identify. Do you work a lot with other funds? Do you work with other VC, other family office? Like who do you mostly work with in market, or is it again just quite open and mixed?
Yeah, we do invest in some funds in particular areas of climate tech where we may not have the depth of expertise to feel like we want to make a direct investment in that category, for example, or in a particular type of tech. And we do come to rely on those funds for, that expertise in that particular niche. And sometimes similar to Vic, we might co-invest in a company, like really want to double down on a company within their portfolio, feeling confident that they've kind of done a lot of the hard work on the deal and the DD. And again, if we're working with other funds, it comes down to that, core alignment, and then being able to trust that, that fund to have done work on our behalf to ensure that they're getting interesting deals. Similarly with family offices, we do work with a range of other companies and families, again, very much based on values alignment, but we find that the deal sourcing from different families can be really different and interesting, and that's just really great to us. The main thing for us is getting the best deals and the most interesting companies from all over the world. And so if we've got more eyes on the ground and people we can collaborate with, that's really exciting for us.
Interesting. And I guess one of the big things that as we started focusing on this sector, one of the really big things that we started seeing was there's so many founders that are out there basically saying, I'm absolutely committed and driven to build a solution that will help change the world. You know, that's why everyone's here. And it's kind of amazing to meet as many people as we have who are so committed to that cause. The other side of that, though, that we've seen is just that sometimes they're so committed to saving the world that they forget to actually build the sort of, how do I articulate the commercial value of what I'm building, and actually I'm building a business. So sometimes the building the commercial opportunity becomes a secondary story. And it's interesting that, you know, a couple of times when I've had that family office conversation, I think what worries me occasionally is, do people just think you're just going to be nice? Just family office is just going to be nice and they'll just give you money because you're saving the world. How do you think about that need to, you know, communicate that commercial value and communicate the commercial opportunity? Maybe to kick off with you, Vic, like, where does that sit for you? Are there instances where you might say, I love what you're doing, absolutely, you're going to save the planet, and I think it's fantastic and we'll support you, but we think you need some help? Like, how do you think about that?
Yeah, it's a great question. And we, you know, we have made the decision of keeping philanthropy and investment under the same umbrella. I know quite a number of family offices have split those two things out for various reasons. And for us, you know, it does all sit within the same kind of umbrella at Wollemi Capital Group, but we do definitely think of investment as, you know, having a financial return and being in good businesses or good funds. And we definitely look at financial metrics as well as impact. If anything, we probably have a higher level of scrutiny on a company because we're judging against both things, right? Like we wouldn't make an investment just because of the impact side of things, and we wouldn't make an investment just because maybe I shouldn't say we wouldn't, but it would be a lot harder to get an investment up that didn't have an impact lens to it, and it would be a lot harder to get an investment up that didn't have good kind of clear sense of market value and commercial returns. I think for us, it really is about finding the balance across the two. And there's so many examples, and kind of our core thesis is that we think good businesses doing good things are going to have outsized returns. And that's why we're really focused on it. You know, especially in the climate space and especially in the diversity space, you know, yes, we care about those things, but we also think that fundamentally, you know, 2023 and beyond, the best businesses are going to be thinking about those things and going to have those baked into the way that they, you know, do business and grow. So for us, it's very much still a financial conversation as well as an impact conversation.
Yeah, great. And Sally, what about for Tripple?
Yeah, very much the same story for Tripple. So we are fundamentally looking for, you know, really good businesses that are going to outperform others. Obviously, we don't know that they will, but we try to see what indications there are that will happen. But when and actually the impact thing is a given, and also to some degree the commercial viability of business has to be a given. And then, like Victoria said, the what differentiates companies is how outsized can the impact be, or how incredible a business opportunity it can be with a fundamental level of impact baked in. So yeah, I think it is a bit of it would be misleading to say family offices are going to invest in someone who's just really passionate about the issue. And some offices will have philanthropy arms or, giving components, what they do as well, that are specifically focused on advocacy and they say strategic impact on an issue where there might not be a market solution at all. And they may actually direct funds into philanthropy to solve those particular problems, whereas with their investment dollars, they're really looking to match that impact and revenue lock and match any other investment they could make. And yeah, it's a really interesting one, because while I've said all that, Tripple does have a sleeve of capital that we commit to catalytic capital or catalytic opportunities, and funds define this differently. But for us, it's really where there's an absolutely outsized impact return, which means that we might make, I don't want to say concessions, because it's not necessarily like we're taking a hit on the investment because we believe it's a really, really good investment, but we might need to just have a slightly different shape of an investment. Say if it's a debt deal, we might have lower interest over a longer period of time to support a company that we think is going to find it hard to, be super commercial in its first 5 years of operation, but after that would be really high performing. So that's the idea of, the word catalytic. It's really to catalyze a market or catalyze a company into existence by using a more creative kind of form of capital. But 90% of our investing has a standard risk return profile. We just are really ambitious when it comes to impact, and that's where most of our attention goes in looking at deals.
Okay. And you've both mentioned being able to sort of make those faster decisions, sort of get to investment decisions more quickly. So, like, Vic, how does your investment committee work? Like, how does that process work in terms of being able to get that speed to decision making?
Yeah, great question. And I do think that is probably one of the things that the founders we work with appreciate the most, is that we can get to a quick yes or a quick no. Our structure is pretty flat. Like I mentioned, it's myself and my brother, and we have an external party that kind of does most of the due diligence and heavy lifting for us, and we really try to make decisions quickly. I think it also probably just depends on the size of a deal. Like for a seed or pre-seed deal that we've done, it's a lot easier to move quicker. I think for some of the bigger check sizes, obviously there's more due diligence that comes alongside that. And again, to the point I made earlier, we have invested in that fund, and we trust their process. Then our own due diligence on a company that's been in their fund for a while is quite light. So we do move quicker, I think. We can get a decision made, usually depending on travel schedules, within like a week or so.
Wow. Yeah, that's impressive. And Sally, for Triple?
Yeah, I mean, in terms of the nuts and bolts of how it actually works, I don't know how much fundraising people on the call have done, but for us, like, when a deal comes into us, it's usually coming either cold or warm, so it's coming through an introduction, or it's coming through our contact form on our website. And the first pass is really just us looking at it, and if it's not an impact company, it's usually immediate pass. And then we're looking really quickly at the diversity in the makeup of the team, because for us, a diverse team looks like a strong team. And so we can often just cull based on, say, a team that's not reflecting any diversity. And then, so there's actually a pretty quick sifting going on around just looking at decks, and I can go into that in more detail if you'd like. But then we go into a first meeting, which is a 30-minute meeting, which we record. Like, one or two of us might lead that meeting, but we record, and we tend to, as a team, watch all of those meetings before we pass on a deal. So our whole team will look at it and jointly decide if we're comfortable passing or if we want to pursue it further. And from there, we kind of go into a deeper process of getting to know the people, getting to know the company. Our three major, metrics that we're looking at are the strength of the team, the strength of the problem, and the strength of the solution, or some people got the quality of the problem or the quality of the solution. And then we pass it through our impact calculator, and we are looking for an ever higher impact score, actually. So part of our KPIs as a team is to have investments or deals being done that are above the average impact score in our portfolio at the time. So we might have a particular number that's our average impact score across our portfolio now. We're always trying to increase that. So hence why we're really looking for deals that are super high impact. That's where we're always trying to nudge ourselves.
And that's your own impact score? Like, that's that internal impact measurement piece that you do yourself?
Yeah, it is our own score. It's just a made up framework that we came up with based on our view of impact, but it is linked to the frameworks that do exist globally in the impact investment community that are starting to take form. They are also emergent. There's not a lot of standards in place at the moment around impact investing, but really we're looking at kind of the how underserved the beneficiary is of the investment. And in this at this moment, we see the environment actually as a key underserved beneficiary that is fairly drastically underserved. So anything that's in the environment climate space at the moment does tend to score very highly because of that context that we are in. And then we're looking at speed of impact, scale of impact, depth of impact. And we're looking at, like I mentioned before, the risk of potential unintended negative consequences, which is a hard one to assess, but really important for us that founders are thinking about that. So when they're looking at, making an intervention essentially into a system, into a problem, have they thought about it holistically, and are they thinking in with that systems lens to ensure that 2 years down the line they don't just come up against another problem that has been created by trying to solve the one immediately in front of us.
Interesting. I think the impact piece has come up so many times for us in terms of, like, especially an early stage company, like what is it I need to show? And it's such a hard question at that early stage, because you tend not to have the metrics that you'd like to have. You're just too early to do it all. So it's interesting to understand how you guys are doing it. So maybe I might want to throw this question to you, Vic. It's from Jamie Robles. So for pre-seed and Series A investment, what's more important for family office like yours, the founders themselves, or other criteria like impact, product, solutions, TAM, traction, growth, etc.?
I would say founder is probably one of our biggest screens and kind of high conviction, especially in that early space. I think for us, it's really important that there's values alignment with the founder, especially if, they're doing, like their life's work or they're, passionate about what the space they're in, or they're uniquely placed to solve that problem. I think is something that we get a lot of comfort and conviction around, is that kind of founder. I think some of those other things that you listed around, product, go to market, TAM, all of those things are important. But I think especially in that kind of seed space, there's so many pivots that happen, that for us, it's really about making sure and having, a level of conviction that the founder is the right person to take that company to where it wants to go.
Right. And Vic, in your DD process, do you have anything similar to what Sally's describing in terms of how you measure impact or how you understand impact? Like how do you understand that? How do you think about the impact that a solution is going to create?
Yeah, I mean, I was taking notes while Sally was speaking. I think they're quite probably more meticulous than we are. I think for us, it's usually a conversation, and we do have a matrix and we do measure things, but we probably have a bit of work to kind of get more sophisticated on it. I think for us, it's definitely an important part of the conversation that we look at any investment through that lens, and we definitely have a negative screen. And to Sally's point, one of the first things that we ask before we even take a meeting about a company is, are they impact focused and are they values aligned? But we don't, for example, score everything based off of an impact score. But definitely goals to work towards, and love that the team at Tripple are doing that. I think for us, it's a little bit more qualitative and gut feel, as much as that's probably the wrong word. But we do think about it, and we do, have quite detailed conversations, both at an investment level and with the founders, right? To kind of understand where that impact might lay. And sometimes it's not, to Sally's point about, the immediate impact versus long-term, and how do you kind of cost benefit analysis across those two. For us, that's really important. We're not looking for short-term solutions. And I guess the other kind of caveat to that is we're looking at things across the spectrum in the climate space. That, early stage tech is a part of that, but we are also looking at, infrastructure scale projects and things as well across the gambit. And so for us, it is very front of mind what the short-term solution might be, but also what the longer term impact of that solution is. And that's always kind of a big discussion point.
And I guess just to that point, I think that you both mentioned in terms of screening for any sort of negative impacts or negative factors, like how effectively can you guys do that? Like how effectively can you see what those potential negative impacts could be? Like how do you do that?
I'm just trying to think of some examples for you, but It does become quite apparent, actually. It's especially with, say, our investment team or on our investment committee looking at something. We may look at, say, I don't want to be too specific, but there's various companies that come under scrutiny later in their life for being less than ethical in their operations, for example, or for having a really serious environmental impact or social impact that they couldn't have seen coming earlier on, or they could see coming and they weren't able to manage that in terms of their governance. Or so if we think of various carbon credit scandals, or if we think of how promising some of the biofuel projects in the past have been, for example, if you think of those kind of things, they can look like a silver bullet. They can look like they're going to solve all our problems. But if you dig a couple of layers deeper, you scenario, sort of plot a couple of years into the future, if this, then that, what does it mean if the world starts to be shaped in this way through this company? You can sort of pretty quickly start to see any potential pitfalls, and they can be just potential pitfalls, and they can be managed through really strong governance or through the founders being really, continually focused on their impact and holding their core values. So hence why the founder question is so important, because you really want to be able to trust someone that they're going to be able to steer the company through any potential issues. There's also a lot of greenwash risk in the market at the moment. There might be that kind of risk, or say a risk where something we often discuss is if a company has, or if an investment has exposure to, say, some large multinationals, or has their interest from large multinationals in this company because it is a promising green innovation, is there a potential that it could greenwash those companies through that involvement, right? So we would ask a founder, what is your view on working with, gas and oil or fossil fuel? Because it could be somewhere in their supply chain, and they may have a really good rationale for working in partnership with those companies, but they'd have to have a pretty good one, from our point of view, to think about our exposure. Yeah.
Okay. So there's a question there from James. James Stewart just saying, how do you weigh carbon dioxide removal with overall sustainability, such as biodiversity? I think there's been a lot of talk around the carbon markets piece, and lots of questions around where does that fit, and how do people rate it, and how do you think about it? I think that's probably an interesting one to understand from each of your perspectives.
Yeah, I can start. I mean, decarbonization is a big focus for us, but it's becoming an increasingly probably blurry market in terms of carbon removal and carbon credits and that space. We've seen a lot of things, and none of them have really kind of jumped out to us as kind of uniquely placed in this space. But I think decarbonization is really important, obviously, for so many reasons. I think we probably also have a unique conflict of interest scenario as well, in terms of a lot of the areas that we have high conviction on from a energy transition perspective. We are conflicted out of investing into a lot of those spaces. And so for us, that's where we really rely on funds to kind of get exposure and kind of make those direct investments that we can't. But I think for us, there's definitely a balance between, carbon decarbonization and sustainability. We've done a few direct deals in the sustainability space, and we're increasingly more being pulled into. And I think just Australia in general has such an expertise in ag tech, and so agriculture and the kind of crossover between those two worlds is something that we're doing and looking at more. But the energy transition will always kind of be front of mind. It's just harder for us to do things in that space.
Yeah. And Sally, how about you for I guess that whole sector in terms of carbon?
Yeah, I mean, they're both urgent crises, and we are in a meta crisis, unfortunately, where our whole system is in crisis, and that's really hard challenge when you're trying to work out what's the most important thing you can be doing with your capital at this time to make a difference. And I mean, this is why our thinking often goes to, okay, well, can we invest in systems change? Can we invest in moving our economy actually into an entirely new set of incentives and an entirely new structure? Because if, climate change is urgent and it's solved, we've still got a biodiversity crisis on our hands. And actually, we still have a land use crisis on our hands and an ocean acidification crisis on our hands. And, it goes on and on. So we're looking at solutions that are sort of trying to tackle more than one of these at a time. Hence, we have a bit of a focus on like regenerative agriculture, renewable energy, but, with that depth of thought around what does this future infrastructure look like when you factor in all these different impacts. But yeah, I mean, really we're interested in kind of systems redesign. It's just very tricky to invest in that right now. But that's the fun challenge we have in front of us.
Okay, cool. And just a question there from James Hine. I'll actually start getting people to just sort of jump in and ask some questions themselves, I think. But he's just saying, what's your interest in overseas deals as opposed to homegrown Australian deals?
Yeah, for us, we mostly invest in Australian companies. We really love supporting Australian businesses and just naturally see a lot of them because of where we're located. And there's also just a sense of, there's a lot of companies overseas being looked at by overseas investors. So we of course do the same here. We are really investing into understanding First Nations businesses as a priority at the moment as well. So that's a process because we have a whole lot of, learning and cultural literacy to do, cultural literacy improvement, I guess, to do as a company to work out how we respond to what First Nations entrepreneurs are saying they want to do in the world, which is so important to do that deep listening because it might not fit our current understanding of what capital looks like or what business looks like. But we are in the process of writing that strategy and beginning to deploy money into First Nations owned and led businesses. We do have overseas investments in our portfolio, but probably 89-90% Australian owned companies.
What about you guys, Vic?
We set up Wollemi Capital Group with very much the view of being kind of a 50-50 Australia-US family office, just given our connections and kind of ties into the US. We're definitely not sitting at that, I think, because we're all based in Australia at the moment. We definitely see more things here and have invested more heavily here. And I think for certain reasons and especially in certain sectors like I mentioned, ag and climate, Australia definitely has some really exciting opportunities and companies here. I think we'll start to look and do more things in the US, but for right now, we're definitely more heavily weighted to Australia.
Yeah, great. And I think you've both referenced the support that you would provide to founders, like some of the ways that you can actually help them along that sort of journey as well. What does that support look like for you? Maybe if you start, Vic, like what are the sort of ways that you would potentially support a founder?
Yeah, great. I think we've talked about this, Kylie, and part of the reason I mentioned earlier that we haven't led any deals is just our capacity to provide that support from a direct perspective. I think we're very good at providing kind of low touch, high value support. I think and I know this will probably come up later, but one of the kind of misnomer is probably the wrong word, but one of the things a lot of companies want from working with our family office, especially in the climate space, is my mom and her expertise and her networks and the one thing we probably have the least amount of access and is her time and capacity to support. So she adds value where she can, but I think any founder that thinks working with us and getting investment is going to get 10 hours of her time every week is just not realistic. So for us, it's really about the balance of how can we add value, and be a support and, advocate for those companies that we are investing in and have high conviction in, without, our time capacity being a limiting factor, I think. And, we have supported companies, not directly ourselves, but what are the ecosystem partners that we can kind of help give them access to, and to provide support that we just, don't have that time capacity. So whether it's working with teams like the High Growth Ventures team, there's other kind of programs that we've recommended some of our founders go through, because, we're not going to sit down with you and go through kind of all your business model questions and things like that. And so where we can support, and, sometimes the limiting factor for founders doing those programs is just kind of the capital constraints or the trade-offs. And so if we can kind of provide capital to go through programs like that we think will have a net benefit to your company, we're definitely open to looking at a model like that.
Yeah, great. And Sally, because we see larger VCs that want to be able to, they want to create their support networks and do all these things to support their founders. And even for larger VCs, it's hard for them to do it. So it's just interesting, like what you guys can achieve.
Yeah, we can't offer anything like what a VC that's linked to an accelerator could, for example, or around support. And I totally love Vic's phrase, low touch, high value. We try to be fairly hands off and leave our founders to do what they do, but add value where we can. So that it might mean conversations with our team, but more likely, intros to other investors. Once we've gained conviction in a company, we really do love to tell people about it and help in fundraising or in future rounds of fundraising. Strategic partnerships, completely agree. Kind of ecosystem partnerships that can be really valuable for startups, for their early customers or early partnerships. What I think is amazing about Tripple, having joined fairly recently, is that they've got such a supportive culture for their founders. So when the crisis with I can't remember the startup bank in the US, I can't remember their name right now, but there's a banking facility that a lot of early stage companies use in the US. It affected quite a number of our portfolio companies, and Tripple just took this view of like, we're not pouncing on them to try and ensure money's okay or anything like that. It was just about supporting them through this crisis point, and that was just so nice to see. And I've seen as well just a general tone of, and I'm trying to be this as a representative of the company too, like tone of support to founders through the investment process, because it's a two-sided thing. And I love Vic as well saying that out of respect for founders, she's trying to like give people a quick yes or no. We try to do the same, and I'm personally trying to play quite an active role in just translating the process to anyone who might be newer to investing, which is part of our, I guess we're trying to be a best practice inclusive investor. And what that sometimes means is just leaning into to support people who may be less familiar with the process and guide them a little bit and try to make it less opaque.
So you are the nice ones. You're all the nice ones. I think that support and that feedback loop and actually assisting with more information is so critical. We did a session here. I saw Alan Jones. Alan Jones, the good one, is on the call. And we had Alan part of a panel that was actually reviewing pitches for a bunch of our portfolio companies, who just said, I never really get independent feedback. I go and pitch and pitch and pitch, and no one necessarily tells me what's right or wrong. And it was a really interesting exercise for, I think it was 4 or 5 founders, get up and actually pitch to a panel and get very, very honest feedback on their pitch. And they've been doing that pitch many, 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 many times, but not really understanding whether it was good or bad, and not actually understanding that they've sort of buried the lead or they've kind of missed the key points. And so I think any sort of feedback loop is so critical, especially in those early stages. So I think it's that's a huge support, I think, what you guys are doing. And so the big question, and this is the big one that everyone wants to know, how do founders find you? Are you all really hiding under a rock? Because that's what we hear. So like, where do you get your deal flow? How would someone directly reach out to you? What is the best way for a founder to connect with you?
Yeah, it's an interesting question. I mean, I think you probably as founders are doing all of the right things, like in terms of, like I look at a number of the kind of pitch nights at places and kind of read a lot of articles about the companies and the top 100 and all of those things. I think a lot of family offices see those things, and so having kind of a PR strategy around those is really important. I think the other place and that's kind of goes without saying, and I've said is we get a lot of deal flow from funds and other family offices that think deals are aligned to us. So having a conversation with one family office, even if it's a no, they can introduce you or share it around. I know I share quite a number of deals with quite a number of family offices, and then make intros where there's common interest. But I think like putting your name out there in venture circles, family offices often frequent and see those things as well. Sally, I'm sure you have more helpful advice than that.
Can you repeat the question for me again, Kylie?
So basically, where would founders find you? Like, how do they become visible to you?
No, I think Vic's advice is great of the PR strategy, because people can find us quite easily. It's a matter of how they can get our attention,
Noticed. Yeah.
I mean, the Tripple team have hired me to take on some of the load alongside our investment associate of screening deals. So, I'm on LinkedIn. I'm always really happy to look at things. You can definitely contact me or our investment associate, Kesh. I mean, like anything, obviously researching the business is really important to make sure that, as in researching us, to make sure you're kind of, where possible, speaking to our priorities is critical. And I mean, I hate to say it, but a warm intro is helpful, because we do rely on others to for good and interesting deals. So it does help sometimes if anyone in our network, which is quite vast, so that could be our portfolio companies, it could be other investors, it could be other family offices, if they can vouch for you or have shown interest in your company, getting them to flick it on your behalf, because they're known to us, therefore there's a little bit of trust by proxy. But look, we have lots of cold deals that come all the way through our pipeline, and the ones that stand out, honestly, are the diverse teams at the moment, because we're actively trying to overcompensate to make sure they go further in our pipeline, make sure we talk to them, and make sure they're getting the attention that they deserve, because unfortunately they don't necessarily have a lot of conversations in other areas of the investment world, or perhaps not as many.
Okay. And Sam, I think that might have answered your question about the referrals between family office, but if not, then sing out. And so I'm just going through the questions now. And then another question from James. Do family offices make a large enough number of investments or a small number of large ones? Is there a concentration of risk? But it sounds like you guys don't have a either or.
Yeah, I mean, within our kind of portfolio asset allocation, we have a slice of the pie that's early stage venture style investing. Within that, like I kind of mentioned before, we're a little bit agnostic around size and stage of the company. I think, for us, looking at a deal later stage, we'd have to have very high conviction, especially, if the valuation's high and the, multiples are just smaller. But, from an early stage perspective, I guess the opposite is true. We kind of think through the founder and the problem space, and do we think that this company is worth our time and energy is kind of the kind of two sides of the equation. But we are honestly agnostic around stage and size of check. which I guess is the nice thing about family offices, is that we can do smaller deals and we can do bigger deals because we don't have, you know, a clear LP base that we're communicating to around that.
And do you guys have a maximum check size, like a minimum maximum check size? Is that how you think about it, or it's really just see what comes your way?
We do not.
Okay.
I mean, I guess the maximum would be how much capital we have, but
yeah.
Yeah, we have definitely got guides in place in terms of how we want our asset allocation to look like across our whole portfolio. And there's caps on our size of a single check, or the caps on the amount we want to have invested in a single entity. Mm-hmm. But our check size is small, I would say, relative to the size of our fund, because we are using every investment at the moment to learn as much as possible and to help us figure out how to use these impact dollars. Creates more work for us and for our team. If we were doing bigger checks, it would be a lot easier, but we decide to have smaller checks so that we can do that learning and meet more people, invest in more companies, and and it's also good for spreading our risk.
Yeah, great. So really quick last question from Kathy. So what level of impact, understanding and measurement do you expect from the founders?
Yeah, I mean, if it's a climate investment, I'm increasingly looking at a very rigorous logic, at the very least, around carbon accounting. So I want them to understand that, you know, claims around decarbonisation are very different to actual decarbonisation, and looking to see a similar level of rigor that you'd want in financial accounting applied to carbon accounting, just because we see that as a really big problem at the moment around kind of claims versus reality. But I think more important than the measurement is that, like we've been talking about, that kind of values alignment, so that we know that founder is motivated to make positive impact. The measuring of it, important, but it's not the first thing we look for.
And Vic?
Yeah, I would agree. I think values alignment and, you know, belief in the founder is probably more important than anything. You know, it's always like, I think Sally's comparison to financials is a good one. You know, like, yes, I like to see that you have a financial model. Yes, I like to see that you have an impact roadmap, but like, actually the thing that matters to me is what drives you and why you're going to get there, as opposed to what like those actual numbers are. Because I don't think, especially in the very early stage, I don't think they necessarily mean that much. It's more like, why are you driven to have the impact that you're looking to have, and does that align with what the impact that we want to have?
And we are about to run out of time, but I'm going to ask this one last question. Is there one thing that a founder could do that would shut down a conversation with you?
I think for us, it's, you know, kind of that like respect factor. Obviously, you know, there are things that we do in the public domain, but we are, you know, intentionally private around a lot of the things that we do and don't do. And so I think for us, it's respect for, you know, our time and who we are and what we believe in, I think is probably, you know, wasting that or being disrespectful of that is probably the quickest way for us to shut down a conversation.
And Sally?
Look, I think, respect is an interesting one. You know, respect for us, obviously, but if we're in a call with, say, a couple of team members from the same organization and we don't feel a sense of collegiality, mutual respect, care among the team, that's a red flag for us, and very likely that we wouldn't continue the conversation.
It sounds like the lack of diversity is an issue for you guys as well. So yeah,
absolutely.
And I am now getting kicked out of my room, but so look, no, thank you. Honestly, thank you so much. It's like really, really appreciated. Busy time of year, and there's a lot on your shoulders to answer for those hundreds of family offices around the country, but I think you've done a great job. So really, really appreciate your time. Thank you to everyone on the call. Obviously, anyone that wants to reach out for a chat, feel free to just grab me on LinkedIn. Thanks Vic and Sally and Climate Salad for setting up. Thanks everyone.
Thanks everyone.
Thank you.
Bye.